case you didn't know, high interest savings accounts are essential for any short-term savings that you have. Now, there are two main bank accounts that most people know about and have themselves, which are checking accounts and savings accounts. Traditional savings accounts have been a place to keep money that you don't plan on touching on a consistent basis because you're saving it for something specific, whether that's your own emergency fund, a travel fund, or for any other purchase. But those traditional savings accounts didn't provide much, if any, interest back on your money for having it sitting there and waiting for you. And even if you aren't paying any fees on that money, the money that you have sitting there for an extended period of time is actually losing value over that time. Basically, because of inflation, prices are typically going up at least slightly over time. So any money that you have that isn't at least matching the rate of inflation is literally becoming less valuable. The good news is that high interest savings accounts now exist. They're literally savings accounts that offer you higher interest rates than traditional savings accounts would. So high interest savings accounts are savings accounts that earn above average interest rates on deposits, so that your money can grow faster than it would with the traditional savings account. Now, this is actually our 5th time doing this video, and we do an updated version of this video every year because interest rates are always changing. Basically, to keep things simple, saving account interest rates are directly tied to inflation rates and what's going on in the economy. When inflation rates are up, interest rates are up. When inflation rates are down, interest rates are down. So although it's not fun to see lower interest rates, especially not when you're watching them come down in real time like we saw last year, it's not an inherently negative thing. It's actually a good thing when inflation rates are at a lower rate. It means that the cost of goods, so basically the price of things, aren't going up as quickly. In general, and ideally speaking, you aren't actually changing up your personal finance strategy too much based on what's going on in the economy. Ideally, you're really focused on having an emergency fund, paying off any high interest debt, and then investing as much money as possible. Now, with all of that being said, Canada's inflation rate is at a higher rate than it was at this time last year. As of December 2025, it's sitting at 2.4%. 1 year before that, so December 2024, it was sitting at about 1.8%. So we've definitely seen some changes with the inflation rate, and we've also seen some changes with the interest rates that saving accounts have right now. So in this video, we're going to be covering what the traditional savings accounts interest rates are looking like right now, and then we'll also get into covering what the high interest savings account interest rates are right now. So let's get into it.
Okay, so let's start off with the big 5 banks and talk about their current savings account interest rates. These banks are also referred to as traditional banks, and they usually have traditional savings account interest rates to go along with that. Now, these rates are usually really low because these banks aren't incentivized to raise them. Now, here's the thing. People are gonna bank with them either way because they have been for years and don't wanna switch, or because they don't know their options. And to add to that, there's also people who like the idea of only using one bank for everything, despite the fact that it's easier and more beneficial to switch it up now. So let's walk through all of the big 5 banks in Canada and show all of the interest rates that they're offering right now. Now, before we kick things off, I do want to preface that there are certain accounts that we won't be covering. So for example, if we kick things off with TD Bank actually has an account that offers a boosted interest rate. Now, this account is actually called the TD Growth Savings Account. And the reason we won't be covering it is because it kind of comes as a bundle where if you're someone who has a checking account that comes with a minimum balance, then you'd be eligible for that boosted rate, and that's just something that we don't feel is worth it. Okay, so like I was saying, the first bank that we have here is TD Bank, and the first account that we're going to be looking at is the TD ePremium Savings Account. So this account right off the bat has a base interest rate of 0%. Right? So that's pretty underwhelming, but that rate does jump up to 0.45% if you have at least $10,000 in that account. Now, this account comes with a $0 monthly fee. It has no minimum balance requirements for this account. It is CDIC insured. And when it comes to e-transfers, we're going to kind of see a theme with some of the other bigger banks here, but what they do is that if you have this account combined with a few of their other accounts, specifically any one of their number of accounts, you'd have to look into that. they will charge you anywhere from 50 cents to, I would say, $1.50 per e-transfer transaction. But if you simply have this account and this account alone, you are paying $5 per transaction. So $5 per e-transfer. All right, so the next bank on our list is CIBC, and we're specifically looking at the CIBC e-Advantage savings account. So the base interest rate on this account is actually a little bit higher than the previous one at 0.2%, and that base rate does jump up to 0.25% if you have at least $10,000 in that account. And they're also offering a bonus rate where you will earn 4.6% for 90 days if you're a new client. Now, this account also has a $0 monthly fee. There are no minimum balance requirements. It is CDIC insured. And similar to the last account, when it comes to e-transfers are not free. You will pay either $1.50 per e-transfer transaction if you have this account combined with one of their other set of accounts. But if you just have this account, you are paying $5 per transaction or $5 per e-transfer. Now, the next bank we're looking at is Scotiabank. So with Scotiabank, we're specifically looking at the Scotiabank Momentum Plus savings account. And with this one, the base interest rate is 0.4%. And they actually are running a current promotion of up to 4.65% for 90 days. Now, with this account, they have a $0 monthly fee. No minimum balance requirements for this account. It is CDIC insured, which is good. And then when it comes to e-transfers with this account, they actually charge $1 per Interact e-transfer. The next bank we're looking at is BMO, and we're specifically looking at the BMO Savings Amplifier account. And with this one, the base interest rate here is actually 0.5%, so actually the highest that we've seen so far. And then they're actually running a current promotion of 4.55% for 120 days. And they also have a $0 monthly fee. There's no minimum balance requirements. It is CDIC insured. And when it comes to Interact e-transfers, this one's similar to some of the earlier ones that I mentioned. You're actually paying $6 for each Interact e-transfer. Now, our last bank in our lineup of the big five here is RBC, and we're specifically looking at the RBC high interest e-savings account. And this one has a base rate of 0.55%. So once again, we're a little bit higher again. And they're also running a current promotion of 4.6% for 90 days if you're a new client. Now, similar story. You have a $0 monthly fee here. There's no minimum balance requirements. It is CDIC insured. And when it comes to e-transfers, in this case, you're paying $1 per Interact e-transfer for this account. Now, I do also want to mention that as it pertains to the current promotions of all the banks that I just talked about, it's important to understand that these banks, the current promotions are going to fluctuate. So they may be different, but you know, at any given point in time, there may be different or new promotions running. Also, another quick note is that you'll notice that when it comes to the current promotions and even some of the base rates, you'll notice that they are relatively similar. So the big five do tend to move in, I don't know, I guess in a synchronous manner. So you will see one bank and when you're comparing it to another bank, you might find that they're quite similar in how they're setting either their promotions or even their base rates.
Okay, so now it's my turn to take you through the other non-Big Five bank high interest saving account interest rates right now. I'm going to be covering what the platform is, what type of financial institution or platform it is, so whether it's a digital, if it's a credit union, provincial or federal, everything like that. And then just like Dennis did, I'm going to also talk about, again, the interest rate, if they have any current promotions right now, and some of the other features. Now, keep in mind that the first thing that you should really be looking for is if the money that you keep inside of these accounts will be protected. Now in Canada, we have the Canada Deposit Insurance Corporation, or CDIC. They protect up to $100,000 per savings account per financial institution, but you need to make sure that the financial institution is a member of CDIC. Now to see if they're a member, you can actually look for this symbol on the bank or financial institution's website. Now, keep in mind that CDIC covers banks and federally regulated credit unions. Provincially regulated credit unions do actually have a different regulatory body that covers them, so I'm going to talk more about that when we get to those options in the list. Okay, so now I'm pulling up our spreadsheet that we have here to actually take you through all these different options and examples. Since last year when we did this video, we actually also have it available for you. It's linked in our description box below if you want to be able to pull it up to compare all these different options. But I'm going to get into it, starting with EQ Bank. EQ Bank is a digital platform, and we're specifically talking about the EQ Bank personal account here. Now, before I get too into it, I do want to mention that EQ Bank is associated with Equitable Bank. That's a large, more traditional bank that's been around for many, many years now, and EQ Bank was created to be their digital arm. Now, the base interest rate for the EQ Bank personal account is 1% right now, but they do have a current promotion. It's actually an ongoing promotion. As of right now, no deadline to it in sight. It's available all the time, of up to 2.75% interest if you direct deposit your pay of at least $2,000 into this account. So you do have to use it kind of like a hybrid checking and savings account and actually have your paychecks deposited here of at least $2,000 a month. But if you do that, then you get an interest rate of 2.75% on an ongoing basis. Now, on top of that, EQ Bank's personal account has a $0 monthly fee, no minimum balance requirement, and it is CDIC insured. They also have free e-transfers, and you also get the EQ Bank card that comes with this account, because again, it's more of a hybrid checking and savings account. Now, if you're interested in opening up an EQ Bank personal account, we will have a link that we have with them, both on screen and linked in the description box below, so make sure you check that out if you're interested. With that being said, the next account on the list is Wealthsimple, another digital platform, and we're specifically talking about the Wealthsimple checking account. That's actually a new update. Last year it was called the Wealthsimple Cash Account. They've since updated it. Again, it's a hybrid checking and savings, high interest savings account all in one, so it has the features of both, and they've now called it, to make that I guess more clear, the Wealthsimple checking account. Now, their base interest rate right now is 1.25% for this account, but they have multiple different tiers. In general, Wealthsimple has tiers. They have the regular core client, I believe it's called, premium, and generation. So again, it's 1.25% if you have less than $100,000. It's 1.75% base if you have $100,000 plus, and 2.25% if you have $500,000 plus. Now, I do want to mention it's not specific to being in this checking or savings account. It's across the entire platform. So it's different than having $100,000 saved. It's $100,000 invested, saved, whatever you name it, all of it counts towards this amount. So your base interest rates on your savings go up if you have more money even invested with them. Now, on top of those base interest rates, they also offer an additional 0.5% on top of that. So in addition to that base rate, if you direct deposit $2,000 or more each month into this account too. So again, you already have the base rate and you can get an additional 0.5% on top of that if you do the direct deposit setup too. Again, they also have $0 monthly fee, no minimum balance requirement for the account, and they do offer CDIC insurance too. How it works for Wealthsimple specifically is that they'll hold your money in up to 10 different institutions, financial institutions that all offer CDIC insurance. So that's how they end up offering it to you. And they technically say that you can get up to $1 million in coverage. That's their current setup. Again, like I mentioned too, Wealthsimple's checking account is a hybrid account, so that's why it has the checking account name, but it's checking and savings. So you also get different features that a checking account has now. They have new ones like mobile check deposit. You can get bank deposit or bank drafts from this account too. So a few different interesting features. And they also have a Wealthsimple cash card too. Now, we also have a link available to sign up for Wealthsimple as well. So if you're interested in that platform, we'll have it on screen in the description box below too. The next platform is Neo Financial. It's again another digital platform, and we're specifically talking about the Neo savings account. They've actually gone through some changes, name changes to this account specifically, but it's currently the Neo savings account. They're actually offering an amazing base interest rate right now. Across the board, their base interest rate is 2.25%. And then again, it actually does still go up from there if you have more money with the platform. So it goes from 2.25 to 2.5% if you have $5,000 plus in this account. And then it goes all the way up to 3% if you have $20,000 plus in this account. Now, on top of that great base rate that they have right now, it's also $0 monthly fee, no minimum balance, it's CDIC insured. And in this case too, they don't actually do free e-transfers. You can't e-transfer in and out of their savings account specifically, but they also have the everyday account, which is essentially more of their version of a checking account, and that one does offer free e-transfers. Now, we also have a link for Neo Financial, so again, we'll have that both on screen and in the description box down below. The next account and platform is actually Simply Financial, another digital platform. We're specifically talking here about the Simply High Interest Savings Account. And again, I want to make sure I mention that Simply Financial is associated with CIBC. So CIBC, traditional Big Five bank, they have their digital version of Simply Financial, but they are kind of tied together. So you can still use CIBC's in-person locations and ATMs if you are a Simply Financial client. Now, Simply Financial's high interest savings account has a base rate of 0.3% right now. Again, they have those promotional tiers where you can get up to 0.5% if you have $50,000 to $100,000 sitting in the account, and 0.6% if you have $100,000 to $500,000 sitting in the account. Quite a lot of money to have saved for very minimal increases in interest rates at the moment. On top of that, though, they do have a current promotion of 4.5% for up to 153 days on eligible deposits up to $200,000 if you're a new client. So basically, if you have $200,000 or less saved in this account as a new client, you can actually get 4.5% interest for up to 153 days. Now, this platform and account also has $0 monthly fee, no minimum balance, it's CDIC insured, and same thing here where there's no e-transfers from this account specifically, but you can do so with their checking account, which is also no fee. Next up is Tangerine, another digital platform. This one's the Tangerine Savings Account, that's the name. Tangerine is actually associated with Scotiabank, so the same way that Simply Financial is associated with CIBC, Tangerine is the digital arm of Scotiabank specifically. Its base interest rate right now is 0.3% as well. The current promotion is 4.5% for 153 days if you're a new client, so very similar rates available there. Again, a $0 monthly fee, no minimum balance, it's CDIC insured, and same situation with the e-transfers. Next up is PC Financial, another digital platform, and it's specifically their PC Money account. This is a new one to our list that we've had some requests to add in the past. Their base interest rate right now is 2.2%. They also have a current promotion that you can get an additional 0.7% bonus on top of that 2.2%, all the way up until February 11th, 2026. So there is a set deadline for this one. Keep in mind, all of these are technically subject to change, but this is the set date at this point in time. And again, it's if you set up eligible direct deposits, this time of $1,500 or more per month, and it would be applied for a full 12 months, which is great. So as long as you sign up on time, you'd get that rate for the full 12 months. Keep in mind, it's 0.7% bonus on top of the 2.2. Now, PC Money account also has $0 monthly fees, no minimum balance required, and is CDIC insured, and they also do offer free e-transfers. Next up, we have Koho, another digital platform. We're looking at the Koho high interest savings account. Their base interest rate right now is 2%. They also give you up to 3.5% interest, but those are for their paid accounts. Again, we're typically trying to highlight no fee, $0 monthly fee accounts, right? So again, if you do use their paid account, you can get more interest, but you'd have to pay a monthly fee for that. So base rate 2%. For that account, it's $0 monthly fee, no minimum balance, CDIC insured. After that, there's Oaken Financial, another digital platform. We're specifically talking about the Oaken Financial Savings Account. Now, Oaken Financial is actually associated with Home Bank and powered by Home Trust Company. So again, more of those more traditional larger banks, and Oaken is their digital platform. It has a very high competitive interest rate right now of 2.8%, which is awesome. No promotions. It's typically what we see from them, a great base rate, no promotions going on. They have $0 monthly fee, no minimum balance, and CDIC insured. Next up, we actually have two more traditional banks that just aren't the big five banks. So there's Laurentian Bank, specifically looking at the Laurentian Bank high interest savings account. The base rate is 2.2%. Can go all the way up to 3.2% if you have between $100,000 and $5 million in your savings account. But again, base rate of 2.2, $0 monthly fee, no minimum balance, it's CDIC insured. They don't have free e-transfers, it's actually $1 fee per Interac e-transfer. And then the other one is National Bank. So again, a traditional bank. We're bringing this one up because it's the National Bank high interest savings account. But in the past, we used to mention the Motive Savvy savings account. It no longer exists anymore because they actually were acquired by National Bank. So it kind of got migrated into this platform instead. So we wanted to make sure we mention that for anyone who was curious what happened there. The base rate for this account is 0.55%. No current promotion, but it does have $0 monthly fee, no minimum balance requirement, and it's CDIC insured. E-transfer wise, it's not free, it's $1.25 per e-transfer. Next up is AlternaBank, which is actually technically a digital platform. We're specifically talking about the AlternaBank high interest e-savings account here. Again, AlternaBank is associated with Alterna Savings Credit Union. So this is a digital platform version of the Alterna Savings Credit Union. The base interest rate right now is 1.15%. No current promotions happening, $0 monthly fee, no minimum balance requirement. It's CDIC insured, which is great because Alterna Bank itself is directly a CDIC member. It is insured. And Alterna Savings itself is a provincial credit union. So two different distinctions to keep in mind with this one. Now we actually have a few more credit unions to talk about. First is Savin Financial, which is a provincial credit union specifically. We're talking about the Savin Financial high interest savings account. The base rate is 2.85%, another great competitive rate, no current promotion happening. It has a $0 monthly fee and no minimum balance. Now, this is the first one that isn't CDIC insured. Remember how I talked about how provincial credit unions are regulated in a different way. Now, provincial credit unions all also have regulatory bodies that do insure up to set amounts. Like, for example, with Save and Financial, if you look at the Ontario version of this credit union, it's insured up to $250,000 through the FSRA, which is the Financial Services Regulatory Authority. I want to make sure I get that acronym right. But they also do have different regulatory bodies for BC, for Alberta, for different provinces. So you just have to make sure you look into each individual one and that it has that coverage. So next we have the First Ontario Credit Union. This time you can hear that Ontario is in the name. Another provincial credit union. We're specifically talking about the First Ontario Credit Union high interest e-savings account here. Its base rate is actually only 0.6%. It goes up to 0.75% if you have $100,000 to $200,000 in your account, and then 0.8% if you have $200,000 plus. So very minor increases there. $0 monthly fee though, no minimum balance, and same situation, it's not CDIC insured. Instead, it has the insurance through the FSRA, specifically for Ontario, of up to $250,000. Also, I should mention, no free e-transfers, it's $1.50 per e-transfer for this account. Now, the next one is the Meridian Credit Union, which is another provincial credit union. We're talking about the Meridian high interest savings accounts. The base interest rate is 0.85%. No current promotions happening, but again, $0 monthly fee, no minimum balance, and again, not CDIC insured. Instead, it has the insurance through the FSRA and the provincial credit union regulatory bodies. Again, no free e-transfers for this one either. It's $1.50 per e-transfer. Last one on the list here is the Desjardins Credit Union, provincial credit union again. We're talking about the Desjardins savings account. The base interest rate is 0.55%. They do have a current promotion of 4.25%, all the way up until March 12th of 2026. So just straight up, that's the rate that you would get until that date. Again, $0 monthly fee, no minimum balance requirement, not CDIC insured because it's a provincial credit union. Instead, it has the coverage through the FSRA up to $250,000. Okay, so that was the last one. So that's officially it for all of these other different high interest savings account options.
Okay, so the last thing we want to remind you is the fact that the interest that you earn from high interest savings accounts or savings accounts in general is taxable. So here's how it works. When you open up a savings account, you put money into that savings account and you earn interest based on the current interest rate being offered. So what's happening here is that your money that you have in that account is growing month after month. Now, when it's tax time, you have to submit a form. Now, it's called a T5 form, or a T5 statement of investment income form. Now, what'll happen is that you'll get this form directly from the financial institution or bank that you have your savings account with. And so what they'll do is they'll make it available to you either on their platform or they'll email it to you directly. The form shows you interest from Canadian sources that you received throughout the last tax year. So for example, if you earned $500 from your high interest savings account, that $500 would be added to your taxable income for that year and you would pay taxes on it. Now, a lot of the time, people who aren't educated on how this works say things along the lines of, you know, you're being taxed in a high interest savings account, so there's no point in using a high interest savings account. When in reality, yes, you are being taxed, but you're still earning more money than you would had you not been using a high interest savings account. If you have your money in an account that's earning 0%, then you don't get any additional money. If you have your money in an account that's earning a higher interest and is taxable, then you're still earning some additional money. The main reason for investing the majority of your money instead of saving it shouldn't be because high interest savings accounts are taxable. It should be because your money needs to be working even harder for you than the maximum amount of interest that you could earn with a savings account in general. So ideally, you'll only save money when you have a specific purpose for those savings, like an emergency fund that needs to be accessible, or for short-term savings that you'll need to take out and use pretty soon. And for that small amount of savings, you'll ideally want to use a high interest savings account to save more money than you otherwise would. Then you'll invest the other money that you have so that it'll grow and outpace inflation over time. So we hope that you found this updated overview of all the high interest savings account options that are available helpful. And if you want to sign up for EQ Bank, Wealthsimple, and Neo Financial specifically, we'll have their links down in the description box below. So make sure you check those out. We'll also have our updated spreadsheet linked down in the description box below as well. So make sure you grab a copy of that if you want to, and we'll see you next week with another video.